Yeah, good evening. A couple of videos ago, I did a video on the bank bailouts and the housing bubble and the lending practices and cause and effect of uh, of the banking bailout. And I'd like to continue on that. I'm going to do a couple videos, perhaps three. I'm going to start with uh, talking about the cause and effect of on the real dreamers in this country. The dreamers I consider the real dreamers, the baby boomers that worked all their lives and would have liked to retire and didn't because of essentially because of the bailout and because of the housing bubble. So we'll get started. Back in the Clinton administration, the minorities and the Democratic Party were leaning on the government and the banks to be more forthright with their lending practices towards minorities. The minorities in general did not have the credit scores of the majority of people in this country. It's just the way it was. You know, banks didn't care what color you were; they cared what your credit score was, and the probability of your ability to pay it back, and your risk factor, and they're a bunch of bean counters. So it had nothing to do with skin color or ethnic anything, sexuality, any of it. It had to do with your credit rating and your income and your savings and a bunch of other variables. So the banks were leaned on, and then the government leaned on the banks and said, hey, we need you to loan money to everybody because it's not looking good. And that's essentially what it was. So they said to the government, well, we don't want to loan to anybody because if we loan to everybody, they're going to default and then we're going to get screwed, and that's going to be that. And the banks and the government said, well, we'll worry about when the time comes. We'll worry about it, not the banks, the government. Nothing bad's going to happen. So the banks, in addition, wanted to protect themselves. So after a while, and they saw all these loans going out to people who statistically couldn't pay them with no money down. So they knew that if the housing market took any hit at all, that people would be underwater in their loans, and a lot of people would just foreclose. They knew those things. We all knew those things, except the people who didn't know those things, which is a lot of the people who are listening to this video right now. So the banks, in addition to the wink and a nod from the government saying, well, don't worry about it. If anything happens, we'll deal with it then, decided to sell the mortgages. And I'll give you an analogy. If I loaned money, if I loaned $100,000 to my neighbor to the south, let's just say, and I thought that the probability of that person paying me the money back was poor, was less than desirable, and I had somebody to my right, so I have this mortgage, I have the title to this guy's house in this loan, and I say to these other guys, I say, hey, listen, you want to buy this stuff? I'll give it to you for 90 cents on the dollar. And lo and behold, the mortgage-backed security market came into being. And these banks weren't exactly honest, and I would say the credit companies, the rating companies had a big part in this too. A lot of conflicts of interest. So the banks got a wink and a nod from the government, but they also said, well, listen, we have to lend the money, but we don't have to keep the note. So they sold the notes. They called them mortgage-backed securities. They mixed them all together, jumbled them all up, and out they went the door to pension funds and government funds for employees and school funds and debt instruments, and they went all over the place, to investment, to mutual funds backed by mortgage-backed securities, and that went out. Then the market went down. The people foreclosed, and the banks didn't even own half the stuff anymore. But they look bad anyway. So let's step forward now. Now we know. So in other words, the banks just did what anybody else would have done. Who was at fault? The government was at fault for twisting the bank's arms to lend the money in the first place. Banks were going to make money anyway about it. And the government, the people, bailed themselves out. So then we go. So we give the banks, as I mentioned in another video I did, we give them $700 billion from the taxpayers, and another 15 to 30 trillion dollars from the Federal Reserve in revolving credit to the end of time or whatever. So what happens? Here's the effect, all right? What happened to those baby boomer dreamers that I was talking about? Well, you see, they all retired. Now, they'd been saving from the age of 18 when they started in the workforce, unlike the kids today. And they saved for 30, 40 years. They became 60, 65 years old. And they always knew in the back of their heads that their house was going to have a lot of equity in it because it was the trend for the beginning of the Industrial Revolution. And they saved in these, they squirreled away hundreds of thousands of dollars over the course of 20 and 30 and 40 years. But they also had the thought that, and I'm not even saying the ones that invested in mortgage-backed securities, I'm saying the conservative ones that invest. And now here they are, they retire, they get their 401k, they get their Social Security, but the problem is that money that they saved, that $200,000 or $300,000 that they counted on for, because historically the CDs paid, a 2 to 5 year CD paid 6%. But all of a sudden, CDs, what happened to the CDs? Why in the world were CDs only paying 0.25%? Ask yourselves, what actually is a CD? It's you lending the bank money and them giving you a rate of return. The banks didn't need your money anymore. They got $15 trillion from the federal government. That's why they treat you so bad nowadays. If you ever notice why, like Bank of America, you can't just walk in and talk to a customer service representative anymore. You need to make an appointment. Businesses, there's no goodwill with businesses. You give the business $15 trillion and they're going to treat the customer just like they would have if they made the $15 trillion themselves. They wouldn't say, well, Jesus, if it wasn't for the taxpayers in the government, I'd be sitting on that street corner with the hobo over there because he's got a better balance sheet than the entire Bank of America does. That hobo on Sombrero Beach Boulevard has a better financial statement than the entire Bank of America corporation. Yet they proudly sit there and tell you what you want to hear. So now we have millions and millions and millions of people that had hundreds and hundreds of thousands of dollars that they wanted to put into income investments, and they can't. So that's why, if you'll notice now, and plus their houses obviously got devastated in value. So now when you walk into a Home Depot or a department store or a lot of these retail establishments, and you see somebody in their 60s and 70s working, those were the dreamers. Those are the dreamers. That dream was taken away from them because now they're back to work. And what do you think about that, federal government? Jesus, the dreamers, I don't know how many, maybe 50 million people, the baby boomers. It's a big segment of society. We're top heavy with older people right now. Yet I hear people talking a lot about the older people, even though I see the older people in these corporations working their asses off because they can't afford that retirement that they dreamed about their entire life. So now you want to know, that's one of the effects of bailing out the banks, of strengthening their balance sheets and their portfolios in such a way that they basically don't give a shit about your deposits anymore. And why do you think the fees are going to go up? They just don't care. How much would I care about people lending me money if the government gave me $1 trillion? I wouldn't care. So that's something, it's not quite as simple as, oh, it's not fair to lend those people money. It's not fair to lend money to people who can't afford to pay it back. We have to do it anyway. Well, somebody pays a price for that. And it's completely unfair. I'm going to continue on this subject. It's 10 minutes goes by. It's too hard to upload this stuff. So I'm going to stop there. This is part one of my bank fiasco, con job, Ponzi scheme by the federal government and the big banks and the Democratic Party and the Republican Party, but not the constitutionalists and the Christian conservatives, because they saw this coming. I saw this coming. That's all. Thank you.